if you don't understand why money exists and its real function, you tend to have no respect for it. And the second thing is actually to do with emotion towards money. So having some sort of emotional barrier towards money itself. So, with the first one, for example, like for the function of money and the purpose of why it actually exists, we're always told these messages where, like, for example, money is the root of all evil, money doesn't make you happy, the more money you have, the more problems you're going to have. But I just want you to think about it for a second, because it's pretty damn obvious, okay? But people always miss this point. Just imagine a world that didn't have any money in it at all. Money obviously has a function. And, in your own time, you can go and look at this online, because it's pretty well known amongst people who understand the function of money. So look up the double coincidence of wants. The double coincidence of wants is really important to understanding the function of money. Because without money, we essentially live in a barter economy. And everything that we're used to consuming in the world now has come about because of the function of money. And it makes society work. It's something that if you understand why it exists, to solve the need of the double coincidence of wants, you respect it more. And people don't get this. So look up the double coincidence of wants and look up the alternatives. So the barter economy, that's the alternative. And, we're led to believe a lot of the time that wanting money is a bad thing. And people blur the lines between wanting to do better for yourself and your family and that type of greed, and the greed of harming or abusing other people, and money is the medium through that. So one, in my mind, is a positive greed, in that you want to do better for yourself and you want to do better for your family. In my mind, there's nothing wrong with that. The other type of greed, obviously, is not good. It's a negative greed, where you're harming other people to become wealthy. And you don't have to do that. If you just understand the function of money, firstly, and respect it, you'll realize that money isn't the root of all evil. It's greed that's the root of all evil, in a negative sense, when you're harming other people. Money has a function, and there's a positive greed. So again, imagine your life or the world without money in it. Everything that you consume, everything that you experience these days is a function of the monetary system that's built up over hundreds of years. And we've come from the barter economy to be where we are today. Without it, society literally would not function. So understand it and respect it. That's the first thing. And understand the difference between positive and negative greed, and do the right things. And what you've also got to understand as well is money itself. In enterprise, for example, there's only two inputs to enterprise: capital and labor. And what you've got to understand is that money itself is a commodity. And labor is a commodity as well. And they both have prices. So capital has a price and labor has a price. So for capital, the price is interest. And for labor, it's the price that labor is willing to work for. So there's a labor market. And in any enterprise, there's just two inputs: capital and labor. And capital markets are absolutely necessary. society would not function without capital markets because capital is a commodity and has a price and it needs to be transacted. And it allocates resources as optimally as possible because there's demand and supply for capital and demand and supply for labor. And when labor wants too much of the share of enterprise and capital gets too less, capital leaves. It goes away. And that's not good for labor long term. So when you understand the function of money and capital markets, you understand that it's absolutely necessary for them to exist. Because in all circumstances in history, when capital has been locked out of the market and left, there's been widespread depression. Money makes society work. And a small problem is that, you know, these days it's very popular to have this view of the world, this view of money, that the system is broken and doesn't work. Well, it does, because there is no better alternative. It's not perfect, but there's no better alternative. And just because, for example, you know, someone was born with no capital doesn't mean the system is wrong or unfair. They just need to understand the role of money and understand its function. So all of these messages that we get about money, so money is the root of all evil. No, it's not. Greed is. Money doesn't make you happy. Well, people that I know and myself with money who have done quite well for themselves, we know that. You know, that we're not stupid. You know, these guys aren't stupid. And they absolutely know it doesn't make them happy. They're generally speaking exactly the same as they were when they were young and had no money. They're exactly the same type of people, but they're just a little bit older and a little bit wiser. And, you know, the other sayings, so the more money you have, the more problems you have. Well, it's just not the case. The more money, you only have problems if you don't manage your money properly. So if you manage it well, then you're gonna do okay. You're actually probably gonna be more comfortable, more relaxed, have more freedom, more choices, and probably it helps you become happier. It doesn't make you happy, it just helps you become happier. So all these messages that people get told, you know, constantly growing up, this creates the second problem as well. So first of all, not understanding the function of money, but secondly, also having emotional barriers to money. This is the second problem. And actually, like, I can just go off and I'll come back in a second to illustrate the point.
Okay.
All right.
All right.
I'll be back in a second. Wait there. I can go and get something and to illustrate the point more accurately.
Okay.
Do you want more customers from your ads cheaper? Do you want to make 15 and 20% more profit from your ads? Higher
Right, mate.
Go back in.
Okay.
Go back in. I'll show you what I properly mean.
Okay.
Okay. So, $20.
Well,
So it's $20 on the table.
okay.
Look at it again. Look at it.
Is this a magic trick or?
No, it's not a magic trick.
Okay.
So when you look at the $20,
Yeah.
what do you think of it?
You could buy me a couple of drinks or a meal or a cinema ticket, whatever.
Okay.
Yeah.
But that's what it can buy you.
Sure.
But what do you actually think of it?
Well, it's money. It's, you know.
Yeah. So, okay.
Okay.
So not much.
Right.
Right. Okay. Now let's move on. What about $100?
Sure. It's, again, I think about it in terms of what I can buy with it, and that's
Okay.
a night out or going to a nice restaurant, whatever.
So yeah, it's like a night out maybe with a few other people, like
Sure.
go to a nice restaurant, have a few drinks, take your family out, whatever, right? Well, what do you think of it?
I mean, it's a decent amount of money. If I lost it, I'd be a bit annoyed, sort of thing.
Okay. Well, let's make the stakes higher.
Okay.
So here's $1,000.
1, 2, 3, 4, 5. Yeah. So
It's $1,000.
sure.
And what do you think of that?
So it's become a decent amount of money.
Okay.
Yeah, it's
What
quite a lot.
What can you buy with $1,000?
You could buy, sort of appliances, things that people typically buy with.
Yeah, phones, TVs.
Sure, games, consoles, whatever.
Yeah, exactly. Okay. So let's take this to a slightly higher level.
Okay.
$5,000.
Wow. Yep, that's
So
about right.
what do you think of the $5,000?
Well, that is a lot of money by any objective standards. That's like, what? Somebody's monthly or even salary for 2 months.
Sure.
Quite a few people.
So what do you think of it?
Again, it's a considerable amount of money for a lot of people.
Now, I could put any amount of money down on that table.
Sure.
I could put 10,000, 100,000, a million. But let's go back to the beginning. Let's take off the 5, the 1,000, and the 100, and go back to the 20.
Sure.
And the next question is this. What do you think the $20 note thinks of you?
Nothing. It's just money. It's just a piece of paper.
Of course.
Right.
It can't think. It's a piece of paper with 20 written on it.
Sure.
It's a commodity. It doesn't think. It's a commodity that's used to transact for goods and services to satisfy wants and needs. That's all it is. Okay. The problem with it, with most people, what they don't understand is that all the problems with money exist with them,
Sure.
not with the money. The money doesn't think anything of you. So whether it's $20, $100, $1,000, $5,000, $10,000, $100,000, $1 million, it doesn't matter. Because $1 million or $100,000 or $10,000 is just a whole bunch of 20s that think nothing of you. So there's no difference except monetary value. So this is the second major problem. It's having emotional barriers, because the more money I put down on the table, the more you think of it.
Sure.
Because you think automatically of what it can buy you to satisfy wants and needs.
Right.
The key is to be indifferent. So going right back to the beginning, understanding the function of money is very important in order to respect money. But at the same time, you also have to reduce to zero your emotional barriers, and you have to be indifferent.
Sure.
Now, this brings up another interesting point. How can you actually be respectful of money, but at the same time be indifferent? It's kind of contradictory,
Yeah.
okay? But in this context, it's not contradictory.
Sure.
And I'll tell you why. Because respect in this context is simply having awareness.
Yeah.
So it's having awareness of what money actually is and being indifferent to money when you look at it, when you see more and more and more of it. And that's the key. So being aware and understanding money, where it comes from. So if you can actually manage to understand it properly and understand its function and be aware and be respectful to it, but at the same time be indifferent, that's the key to actually starting on the road to becoming successful. Because money will come to you, you will respect it, but you also know at the same time what it can and can't buy you, but you're indifferent to it as well.
Sure.
And if that makes sense to you,
Yeah.
then you've got through that barrier.
Sure.
Any
All right, so does that make sense to everybody? What are some key takeaways? Yep, being different. What else? Respect money. Yep, money leads to freedom, not being controlled by money. Exactly. Exactly. And I will say, throughout your journey of trading, like I'm telling you, it's gonna be completely different from what you're used to. So it's all comes down to having the right mindset about money, just in general. Okay? So let's continue forward. All right, so we know how to use TradingView now, which is good. Now we're gonna start getting into some basics of charting. So the first thing we have to understand is, candle anatomy. Now, if you are not familiar, it's kind of like the stuff I showed you guys yesterday, how we have these purple and black things. These are called our candles. So essentially for us, the purple ones represent price going up. The black ones represent price going down, okay? So if we let's do this here. So if we look at this stock from, let's say here, all the way to over here, the consensus is, what did the stock do? Did it go up or did it go down? Yep, exactly, it went up. Now we can tell this went up by what? What is showing us that it went up? Yep, we got the price. Yep, exactly, the candlesticks. So we can see we have a lot of purple candlesticks moving in one direction. Now, throughout everything that I'm going to teach you, to make it very easy on yourself, do not be too intricate at all. So always focus on the general move. So if we have something like, it looks like this, just look at the overall thing. Don't necessarily try to focus on, well, this candle did this, but this candle did this candle did that. We're not necessarily going to be reading exact candles one by one. That's dumb. We're generally going to be looking at the overall view of things, okay? So when it comes to candles, we have to understand what these things actually mean and how to read them. So for this example here on the PowerPoint, let me go do this. So we're going to break down the candle anatomy, okay? So for right here, this black candle is going to be our bearish candle. So when you hear the word bearish, think of down. So put bearish means we go down. So we see these black candles means we go down. Bullish means we go up. So when you see, and this example is blue, but on the charts it'll be purple. When you see these ones, that means price is going up, okay? So for our bearish candles only, Well, actually, for all candles, it's going to be in the form of a rectangle. Okay, so for bearish candles, the way you would read this is the top of the rectangle right here. That is going to be where price opened for that specific candle. The bottom of the rectangle is going to be for where price closed. So if this was on a chart and we saw, let's say this is 90 and this one is 93, we can see that this stock opened at 93 by looking at this candle. We can see at the bottom of the rectangle, that's where it closed. So we closed at 90, thus showing us our open and close, we dropped $3, okay? And then the lines that come out of the candle is called our wick. So for our wicks, these are always going to represent the highest point of this candle and the lowest point of this candle. Okay? So remember, for bearish, top of the rectangle is open, bottom of the rectangle is closed. And then some candles may have wicks, some may not. But let's say this one has a wick. This is going to be our lowest point for this one candle. The top wick is going to be our high. Just like that. So if we went to the actual chart, let's say we just picked, let me find a random candle. All right, let's say this candle right here. This black one here, the singular black one. So I'm gonna put some price labels on it. Okay, so I'm going to pick a random person and I only want them to answer the question, okay? So let's do Henry. So for this bearish candle here, this black one, at what number did price close? So for this candle here, what is the closing price? All right, he said 296. Is he correct, guys? Is this the closing price for this candle? All right, let's check. Yep, he is correct. So for the bearish candle, the bottom of the rectangle is our closing price. Good job. All right, and then I want you guys to tell me, anyone can answer it, what is the highest point for this specific candle? What's the high of this candle? Yep, 326.54. Good job. And then what is the opening price? Yep, 322.85. Good. And then what's the closing price? Or not the closing price, the lowest price. Yep, 285.3. Good job. Good job. All right, so we can see this candle here. We have a wick for the low, a wick for the high. Now, some candles are going to look a little different. So we can see this one here. We can see our wick is smaller, and that's perfectly normal. Not every single candle is going to be the same size or look identical. So the same thing applies. We have the same open, have the same close, have the same high, have the same low. This candle here, as you can see, we don't have a wick. So our low point is going to be the exact same as the what? So our low point for this candle is going to be the same as what? Exactly, it's going to be the exact same as the closing price. Good job. And then they find one with the opposite. Okay, here we go, right here. So in this candle right here, our high point is going to be the same as what? Yep, the open. Good job. So let's go over this one more time just to make sure everyone understands. So let's make this black. So we have bottom of rectangle is our what? Open or close? Okay, I don't know if you guys are confused, but the bottom. So for the bottom one, is this our open or our close? See, a lot of people got it wrong. Are you guys sure? You guys positive it's the close? All right, good, good. I was just testing you guys again. You guys are confident, so that's good. Good job. Yes, this is our close. I was just seeing if anyone was going to change their answer. The top of the rectangle is our open. Bottom wick is our low. Top wick is our high. Just like that, okay? Now, when we go to bullish candles, everything is the same except the open and the close. That's the only thing that's flipped around. So bullish means price is going up. So our bottom of rectangle is going to be our open, the top is going to be our close, and the wicks means high and low. Same thing as over here. So if we go to the charts again, we can look at this candle here. The top of the rectangle for a bullish candle is going to be our what? Open or close? Exactly, going to be our close. The bottom of the rectangle is going to be our open. The bottom wick is our low. The top wick is our high. So if we drew a bullish one, it would look just like this. So the bottom of the rectangle is our open. Top of the rectangle is our close. Bottom wick is our low. And top wick is our high. Bearish candle, bullish candle. Just like that. So this makes sense to everybody? Any questions? All right, perfect. Okay, so now moving on. So you guys remember how I told you guys about time frames yesterday on which ones to have starred? Okay, now the way these works, so every single time frame means a different thing. So let's say we're looking at, remember this SMCI. All right, so let's look at Apple real quick. Gee, this thing is so high. Okay, so if we're in whatever time frame we're in is representation of the candle. So right now, if I click 1 week, we're in a 1 week time frame. So this means every single candle represents 1 week of time. So this candle here was last week. This candle here was the week before. This candle here was the week before, and so forth. Now, if I switch this to a daily, so 1 day, we get more candles. So instead of getting 1 candle per week, we get 5 candles per week. So now every single candle represents 1 day. If we go down to a 1 hour, you can see we get even more candles. So now every single candle represents 1 hour of time. And then, so on. If we go to 15-minute, every candle is 15 minutes. And we get more candles, and it continues going and going and going. So when it comes to looking at time frames, this is probably one of the most important things when it comes to trading, because if you do not understand how to scale through time frames, it's going to mess up everything. So think of time frames as here, let me look this up. Give me 1 second. I'll give you guys a great example. Hold on 1 second. So this is this is exactly what time frames do. All right. So if I gave you a strawberry, and this is what it looked like, a lot of people would probably eat it. Like, oh, it's cool. It's a normal strawberry. Looks perfectly fine. Now, if you go to a microscope, put a thing on a petri dish, look at it very close, you're gonna see things that you couldn't see when you just saw the strawberry from, just a, eye's distance. But now with the microscope, you can see smaller things. You might see a little bug on it or whatever. You might see little things in this to where if I showed you the strawberry first underneath the microscope and then I told you to eat it, you probably wouldn't have eaten that strawberry. This is exactly the same thing when it comes to trading. So think of the higher time frames, the larger ones, just as if I gave you a strawberry without going under the microscope. So the larger time frames, what I mean by that is going to be your 1 month, 1 week, 1 day, 4-hour time frame. And then think of the mid time frames as if I just, instead of me showing you the strawberry from 5 feet away, I showed you the strawberry right in front of your face. Think of that as the mid time frame, such as the 1 hour, 30 minute, 15 minute, 10 minute. And then think of the low time frames as if we're looking at the strawberry underneath the microscope. Now for those, that's the 5 minute and everything below. So the strawberry analogy is the exact same thing with trading. Now, when it comes down to it, when price moves, if it goes in one direction, let's say price is going down, and then we switch to going up. It's going to switch from bearish to bullish first on the lower time frames, and then as it gradually continues, it shows up on the higher time frames. But when we're breaking something down, we always want to go from higher to mid to low. Okay? So primarily what we're going to be doing is just day trading. And this just means when you buy something and sell it in the same day. So with this, the order of operations with the time frames is you're going to start off on a 4-hour time frame. We're going to go to a 1-hour time frame. Then we're going to go to a 15-minute, and then a 5-minute, and then a 1. Now I'll break down why these specific ones. So the 4-hour just shows us the overall view. What's price looking like? Are we bullish or bearish on the larger picture? Okay. Now if we go down a little bit more, okay, within this, does the 1 hour support the 4-hour yet? Then we're using the 1 hour and 15-minute to understand, okay, within the 8 hours of trading, what is price looking to do on a shorter time frame? So then we can figure that out. And once we find that out, we look for an area to actually enter the market, which is on a 5-minute or a 1 minute. And that's where we get even closer. So we're not going to get in depth on charts and breaking down time frames, but I just want you to understand the overall picture. So we start off on the higher time frame to see what are we actually looking at, right? Are we looking at, let's say I'm 30 feet away from you and I hold something up. You probably won't be able to tell it's a strawberry. So we're looking at it a little closer, but okay, I see that's a strawberry. Okay, now let me, look up a little closer. Let me get it 2 feet in front of my face. Okay, yeah, I can guarantee that's a strawberry. Then we go to the lower time frames, like the 5-minute and the 1 minute, under the microscope, and we see, okay, I see this is inside the strawberry. So maybe I want to avoid this, or this is where I actually want to get in the market or whatnot. And that's how we view these time frames, because think of all of this as like a story. It all has to support each other. So when we're going to get into a trade, we we need to understand what the higher time frame, the mid time frame, and the entry one are all saying together. Does that example make sense for you? Oh, you said the sirens were loud? Okay, yeah, I got you. So for the time frames, it's really like they don't have to necessarily be in sync, but you need to get the full story. So on a 4 hour, look at the overall picture. That's what it's showing you. Because every single candle represents 4 hours of time. So we can see overall, since every candle is 4 hours of time, it's bearish. Now, if we go down to a 1 hour might say, oh, we're bullish now. Go down to a 15, it might say the same thing. Okay, we're bullish. And then with that information, we go down to a 5 minute and a 1 minute. And that's where we understand where we actually need to enter the market. So you don't just go to a 4 hour and say, okay, yep, let's say, for example, oh, we're bullish. I'm going to start buying calls. Nope, that's not how you do it. Got to see the overall picture first, go down to the mid time frames, and then it'll tell you, okay, within this given day, we are bullish or we are bearish. You get that from a 1 hour and a 15 minute. And then once you understand that, and as time progresses, I'll show you, when you would actually want to enter a trade or whatnot. But then with that information, you go down to a 5 minute and a 1 minute, and that's where you decide where you're actually going to enter the market for the trade. Okay? So always remember, how'd you checking outside? So always remember, start off on the 4 hour. Then you go to a 1 hour, then you go to a 15. So the 1 hour and 15 is going to give you kind of like your thesis just for the day. Thesis for the day. And then the lower time frames, the 5 minute and the 1 minute, those are really the only ones I use. This is for our entry. This is where we're actually getting in the market. And then the 4 hour here is showing us overall picture. Okay? So just make sure you remember that. 4 hour, 1 hour, 15, 5 minute one. The other ones don't really matter too much. Just really those are the 5 you want to remember in that specific order. Okay? Any questions before we continue? Okay, so I'm gonna quiz you guys real quick. Okay, so if, let's say I just opened up TradingView, and let's say I went to Microsoft. What's the first time frame? Actually, no. Let's just say, boom. Let's say you guys are controlling me, like this is a video game. All right, I wake up, I go on TradingView, I open my computer. What's the first thing I should do? Yeah, Jensen got it. Forex Factory. So go to Forex Factory. And then we go to check to see if there's any news. So tomorrow, do we have any news that's important to us? Yes or no? Yep, and which one? Yep, FOMC. So we can see that's at what time? Yep, 1 o'clock, which we can see all right here. So it's that red folder. That's a little, a little strange. But here we can see 1 p.m. right here, red folder. So now we just have to keep that in the back of our mind. Yep, so make sure you adjust your time zone for where you're at. All right, so now that I know that, I go to TradingView, and then what do I do first? Yep, it does it. No, so you have to set it up yourself. You have to switch it, and then it'll do it automatically. Yep, so we go to the 4 hour. Good job. So now on the 4 hour, what is our goal? Why are we going to the 4 hour? What are we trying to understand? Exactly, the overall trend, the overall picture, overall bias, overall direction. Perfect. So then, this is literally just an example. I'm not saying this is actually true, but let's say I decide, oh, okay, overall trend, we are bearish. So we think price is going to go down. So now what should we do next? Yep, drop down to the 1 hour. So now for the 1 hour, what is this going to show us? Daily thesis, good job. Nope, so not confirmation bias, just a thesis for the day. That's it. Just showing us within the day, what can we expect price to do? So that's the 1 hour and 15. And then after I figure out the 1 hour and 15, what do I do next? Yep, drop down to the 5 and 1 for entry purposes. Good job. All right, Brandon said, what about the time frame? Options on the bottom left of the screen. On the bottom left. Oh, these down here don't mean anything. It's so funny because I never even noticed those were there. But yeah, I don't use any of those. How far should you look trend-wise in a 4 hour? Really, actually, we'll get into that later because I feel like that might start to confuse people. But we'll get into that soon. Yep, so also another thing, you guys, is you see how there's the dates on the bottom? None of these dates matter. So like, don't pay attention to the dates. When it comes to trading and charting, it's more so just about what's relevant to where price actually is. So like, we can see price is at 383. If price was to go up, we need to see, okay, when is the last time price has been higher than where it's currently at? We can see all throughout this area. So this is what's relevant. If price went lower, when's the last time price has been lower than 383? All down here and down here. So therefore, this is all relevant. So when it comes to, thinking about how far we need to look back, just think about it in terms of relevancy. So if price was to go down, when's the last time we've been lower than where we are? All over here, so we need to pay attention to this. If price was to shoot up, when's the last time we've been higher than 383? All over here, so we need to pay attention to that. So just overall, just in relevancy, we should probably be paying attention to, just everything within this area over here, rather than the dates. So the dates don't matter. It's just about what's relevant to where price currently is. So that makes sense? All right, good. Perfect. Jeez, today flew by, didn't it? It's already 5:53. Feels like we've only been on for like 10 minutes. Oh, that's crazy. All right. Okay, so now, does anyone remember what price action means? What does price action mean? Yep, movement in price going up or down. Good job. So we'll just put movement in price. Okay, so there's a thing that I'm going to show you guys. We have I'm just gonna abbreviate it as PA. So we have healthy price action, unhealthy price action. So the difference between these two, when it comes to stocks in general, it is not realistic, it is not common that something goes up, like if, and let's just say just bullish example. Bullish example. So if something was to go up, it's not just gonna shoot straight up like this, right? That is not healthy price action. Healthy price action is when something goes up like this. Like as you can see, we're going up and we're going down. That is healthy price action. That is something that is built to last. Now, unhealthy price action is if we just get just one clean move to the upside. Because if something goes up too fast, it's not stable enough to continue that, and it's going to make its way back down much faster. Now, we've seen this over the course of the last few years with the rise in inflation and everything like that, and and rates and all that type of news that has pushed stocks to move at speeds that aren't necessarily healthy, rather than something like this here. So when you look at a chart, and I'll show you guys some examples. Let's look at this here. So I'm going to go to a 1 week time frame, and let's get rid of this here. This is an example of unhealthy price action. You see how we just went up, moved sideways for a little bit, and then just shot straight up? Yeah, this is amazing, but this is not healthy price action. This is just one straight move to the upside. And mind you, we're on a weekly time frame. So every candle is 1 week. So that's just one clean move to the upside. And this is a 331% move on the stock. Now, when things go up this fast, better believe it's going to come down just as hard. So as you can see, it already came down quite fast. So this is a sign of unhealthy price action. Whereas something like, let's see. Say something like Google here, you can see this is healthy price action. We have a lot of ups and downs, ups and downs. So if we just look at the overall view, we went up, we went down, we went up, we went down, we went up, we went down, we went up, we went down. This is healthy price action. This is something that is built to last. So that's the difference between healthy and unhealthy price action. So not necessarily saying one is better than the other, but it's important to recognize which one you're actually within. So let's go through a couple examples. Let's go to Roku here. Is this healthy or unhealthy price action? Just within this push up. Exactly. Unhealthy because of what? Yep, it's literally just one side. We just went straight up. Not many pullbacks. Now, if we look at the result, you can see we fell down even harder. Okay. Now, if we go to something like Apple, is this healthy or unhealthy price action? Yep, very healthy. We have a lot of ups and downs throughout this whole thing. It's not just one-sided. This is healthy price action. Okay. Now this concept will apply on all types of time frames. Okay, so it doesn't matter if it's 1 minute, 5 minute, 1 hour, 1 week, 1 day, any time frame, all this stuff still applies. Okay, and once you're able to understand that, it'll make your life so much easier when it comes to like charting and whatnot. Okay, does anyone have any questions? If confused with price action or line chart, nope, so we do not use line charts. Don't use this at all. So just look at it like this. So just for this, we're just looking at the overall view. Just the overall. So kind of like if you squint your eyes a little bit and you see a lot of back and forth, typically is healthy. Now say we squinted our eyes a little bit and we had this, we can see this is just one straight move. All right. Okay. Let's see, does anyone have any other questions? No, today was good. Is everything pretty straightforward? Breaking it down good? Is it digestible? Perfect. Is there anything about pre-market, post-market we should look for specifically? Nope, not yet, but we'll get into that soon. Yep, just have to review the open and close again. Yep, no problem. And I'll give you guys some good homework for today, most definitely. All right. So this concludes today's meeting. See, if you have any questions, put it in the chat. I'll put your guys' homework in there as well, and leave feedback on today's session. And we'll see you guys tomorrow in JT's meeting. As I said before, try your hardest to keep up with the content, because I'm telling you, once we start going, like, this shit's gonna start moving fast. And for a lot of you guys that are new, it might be a little confusing, so you're gonna have to actually pay attention, take notes, do whatever. But as I said, we're here to help you guys win, so I'm pretty sure you guys will all be good. And you guys are learning pretty quick, so that's good. All right. So I'll see you guys in the Discord, and we'll see you tomorrow in the meeting with JT. Have a good night, everybody.